Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend, all. Ira Epstein of Flynn & Associates with your agriculture update, and this is for the end of the month, March 31st, 2017, about 1:45 p.m. Central Standard Time. Well, the big event of the day was what's going on in the grain markets, and when you look at them, the reports that came out today, I'll go to them in 1 minute here, were a bit friendly. Corn, because it had fallen so much. Wheat, neutral to friendly because it had fallen so much, and still bearish in the soybean complex, even though it had already fallen quite dramatically. So here's what we have. We had the March 2017 quarterly grain stocks come in on the corn market at 8.62 billion bushels. The market was estimating 855. That's bearish. Bean quarterly stocks came in at 173. They were estimating 168, bearish there. Wheat quarterly stocks, 166. They had estimated 162, bearish there. But where you get a little bit of the play around is in the corn acres. Now, this is prospective planting acres. These numbers do shift as the market goes on. 90 million acres was the estimate. They got 90.9 million acres. So I said that wrong. They got 90 million acres. They were looking for 90.9 million acres. Therefore, that's a little friendly. In the soybeans, 89.5 million acres. They were only looking for 88.2. That's bearish. All wheat, 46.1 million acres. That's exactly what they got. That's where you got the bounce there. Same thing in winter wheat, about where it was, and about the same thing in spring. So you put it all together, wheat gets its bounce because it came in as expected. Cotton prospective acres, 12.2. Now, a year ago, they had done 10.8. I didn't have an estimate for that, so couldn't do too much with that for you. But as you can see, the big report came out, left the beans on the defensive, and with beans down, where do you go? Well, let's take a look here. This has been a pattern that I've left on this chart for you for quite a while. It's a monthly chart, folks, so it takes time. This whole breakout down is now the month of March that is behind us, and next week when we begin on a monthly chart, we begin in April, and it'll begin down in this area. So the breakout, fait accompli, it's happened, past tense. When we come to the weekly chart of closes only, you've now gone from 1080 to a close of 946. So we've broken $1.34. It's a heck of a break. It has happened since January when the market peaked out. And as we've come down, when we got to the point of looking at the size of South American crops, where they were coming, that's what put the pressure on. And of course now we are in the fields, and that is going to be the important part. When you take a look at what the market's done on the weekly basis, you went from 1080 and down to a low of 944 and a quarter. So from a settlement price, we're only about 1 3/4 off the absolute low we've made. In terms of the swing line study, it is bearish. Lower highs, lower lows. When you take a look next at, let me get here, the moving averages, you're under both the 18-week and the 100-week average, still bearish. So where might the market head? Well, the first support was between the 100-week average in green at 969.5 and the lower Bollinger Band at 955 3/4. You're now under both. What that generally means is you're going to have to twist and turn the weekly Bollinger Bands and start them pointing down. Now, they've been doing that. You can see that a couple of weeks ago, you can see this right here. That was flat. Then you started your move down. So that should continue going into this week. But you're under a weekly Bollinger Band, and the odds of staying under it are only 5% of the time. So somewhere along the line here, I expect some sideways to higher action to do that. In terms of momentum, it is still pointing down. Admittedly, it's oversold, but when you're dealing with weekly charts, they can stay that way until they begin corrections. It could take a month. You just don't know where you're at. But momentum is still pointing down. Meal market broke out to the downside as well. Lower highs, lower lows under both moving averages. And again, momentum pointing down in oversold territory. Soybean oil. Market's got the pattern of lower highs, lower lows under the 100-week moving average of closes. Could carry us down to 30.95 now, which is the lower Bollinger Band. And unlike the other two, the soybeans and the soybean meal, you have an embedded reading. It's just locked into all this bearishness unless you were to get out on the current chart pattern, get up and over 33.94. And what that would do, it'd probably be enough to kick out the embedded reading. In the corn market, you're sort of stuck right here. I was watching the big rally today, and the market ran into the 100-day average of closes, and I'm talking daily charts. And when you come right here, it's about where you're at on the 100-week moving average, 364 3/4. So you've got your resistance points. They're interesting. The trend remains down unless the market can get over 370 3/4. Should that happen, this area could become something of support, and you could be headed up to the 380 zone. In the wheat market, you've been hanging at the 18-week moving average of closes now because this is a weekly chart. 1, 2, 3, 4, 5 weeks, a full month of just hanging in right here. You're really not trending. You're just try rallies, you fall back to it. You haven't tried much on the downside, and I'm not sure it will because it's got upside bias at this time. In the cocoa market, I was looking when you lost the embedded readings to get back to the 18-week moving average of closes and exactly where you're at. There is nothing to do here in terms of what? Well, the swing line's up, that's bullish, but because you're under the 18-week moving average of closes, the two fight each other and you're left with nothing. Momentum, on the other hand, is still pointing higher, but the market just can't seem to stay over that 18-week moving average of closes. Sugar market has fallen into major support at 1651, under the lower Bollinger Band and right at that right at the 100-week moving average of closes, and the slow stochastics still have downside momentum. Now, a couple of things happened to sugar this week. The Brazilian crop still looks very, very large, larger than people thought, and the damage in Australia from the cyclone didn't do the amount of damage that it might have, so that combination's what hurt this market at the end of the week. Coffee's interesting. I was looking just before we did this for where the seasonals are in this, and it generally starts picking up at about another week or so in April. So we'll see what happens. Are we trending? We're not. We have a lower low, a higher high, and a market that is oversold and just going sideways in momentum. Let's see if we have anything else left here. Yep, the meats. So now we've got a cattle chart that's got nothing to do again. Let me explain it. You're over the 18-week moving average in red, so that's upside bias. The swing line's pointing down, that's negative. What can turn the trend back is taking out last week's high, if you don't exceed this week's again, and that could give you higher lows, higher highs. Barring that, if you fall back to the 18-week moving average at 116, let's call it 116.90s, that's 300 points from here, you still got to close under that to get bearish. So it's easier to get bullish this market than it is bearish on the weekly chart. That's the point. The hog market's different. The hog market's got a higher high, a lower low. It got finally back under the 100-week moving average of closes, and it found its support against the 18-week. The bias is what? Well, it's down because you closed under the 18-week, but you're not trending on the swing line either. So I put that all together and wonder, where do you get your market information? So let's talk about this, because in the grain market, it's what Linen Associates are known for. We are really deep in the grain business. It's still on the pits and the floor. We make markets and options, things of that nature. Yes, there's no more open pit outcry in the futures. There are in the options, though, and we have very big presence down there. Now, as I look at what's going on in the marketplace, I look to see, you get a report like today, what's the input? Now, there's two ways you get it with us. Obviously in writing, and we'll be writing about it and did write about it right away. But instantly, in our charting software, It's all there with voice. We're going over what the report is. We're discussing it with you. It's like you're listening to a forum. Go right on through it. Really interesting because it impacted the grains and the meats, of course. And it's another idea as to what is inflation going to look like. I mean, we've got a stable energy market right now, but food prices under a bit. How do you get this information so that it comes to you right away and you can view it? Well, you can call us. You can go to our website. You'll see a carousel of free offers. You can come right up here. If you're watching us on YouTube, you'll see an icon. Click that on. The form will appear. I'm Ira Epstein. You have a great weekend, and I'll see you in the other video.